Eventually, this is going to happen. And when it does, dollars will no longer be the reserve currency of the world, and it will go back to the monetary precious metals. Well, hello there, my friends. Rafi here from the Endgame Investor, coming at you with this week's Silver Report for Arcadia Economics. It is January 19th, 2022, and we just had a very big day, and I will put it into context. But first, I want to focus on something very fundamental. Since 2008, two very scary drops in precious metals, particularly in silver, 2008 and 2020. During flash crashes and liquidity crunches and dollar panics, I want to go into a deeper look into what is happening during these events when everyone is scrambling for dollars. What it means, what is happening in the US banking system and the international banking system. And once we have a deeper understanding of the mechanics that are going on during these types of events, we can understand them better, be less freaked out by them, and use them to our advantage. One more may be coming, perhaps not, but in case it does, we should know what is going on. In that vein, we'll go into words written by Daniel Oliver of Myrmikan Capital, who explains the mechanics of this situation, and hopefully we'll all have a better understanding of silver's role in this process. In a research note from yesterday, January 18th, Daniel Oliver writes the following, and there'll be a link at the bottom of the description if you want to read the whole thing. So here I've titled this, "What is the end game fundamentally?" What is going on during these dollar panics when everyone is grabbing for dollars? What causes dollar strength when everyone is panicking? Is it a flight to safety, or is it something else? And to understand what exactly is going on, you have to understand what euro dollars are and how they were invented and how they support the entire dollar-based system. So Daniel Oliver writes, euro dollars were invented in the late 1950s by the Russians, who wished to hold US dollars but not in US banks. So they deposited their dollars in British and French banks instead. These banks operated beyond the reach of American regulators and lent out these dollars to foreign borrowers. So back in the 1950s, you had the dollar as the reserve currency, which was the strongest currency because it was backed by gold at $35 an ounce, and foreign central banks could get that gold if they so chose. So the Soviets, who wanted to use those dollars because it was a stable currency and they could buy stuff, did not want to support the US banking system, so they kept dollars outside of the US banking system, which took them out of US banking regulations, which enabled them to finance their stuff a lot easier. That's how euro dollars started. Second paragraph. In financial crises, or when the Fed is raising rates, as they are doing now or about to start, the dollar rises not because of safe haven demands, or because a % or two of extra yield compensates for the risk of investing in a completely insolvent government, but, and here's the key, because Eurodollar borrowers need more dollars to service their debts. That sentence is key. Eurodollar borrowers need more dollars to service their debts. If you are a company outside of the United States and you borrow in dollars, which many of them do, why? Because there are so many dollars available because of US trade deficits. If you are a company that borrows in dollars and you have to repay in dollar-denominated debt, you need dollars to service your debt and stay solvent, or otherwise you go bankrupt and your company and your assets are gone. So in times when there is a dollar panic, when the Fed starts raising rates, foreign companies bid for those dollars. As their asset prices are going down, they need to stay alive, so they sell even more of their assets to buy dollars to service their debts. And everyone does this at the same time, which brings the dollar index temporarily to highs, and other assets are sold, bringing down gold and silver prices very temporarily. The twin mortal threats to the current dollar system, thus, is either a financial collapse in which borrowers, foreign and domestic, default en masse, losing their assets, but also their need to bid on dollars in the first place, or the overissuance of dollars during an economic downturn, meaning too much money printing, satiating the demand for dollars without prompting the creation of new debt. So basically, Oliver is saying that once the Fed raises interest rates to a point that is going to cause the next economic crisis, and that is fast approaching, as we see in bubble stock prices, especially in the ARK Innovation ETF. Once that happens, the Fed will either not print, in which case there will be many defaults, and all those companies defaulting will no longer need dollars, or they will print and the purchasing power of the dollar will collapse, which means that new debt will not be issued in dollars because the inflation rate in the US dollar will be too high. So either way, demand for the dollar is going to fall after the next liquidity crisis. Now, the question is, how many Eurodollars exist outside the US banking system? We have the answer to that question in the cumulative trade deficits since the early 1990s, and that is the next chart I will show you right now. Here we have the trade balance in the United States from 1992, it looks like. Back here, you see that the trade balance was pretty much zero, and here it started to really get out of hand. If you take the cumulative trade deficits from this year to the early 1990s until now, and you add up this entire highlighted area over here, you get $13,114,066,000,000. And why did I put a 2 there? Just to make sure you're paying attention. So we have about $13 trillion that were exported from the United States in order to fund these cumulative trade deficits since the early to mid 1990s. And there's corroboration of this. This is the amount of dollars that are outside the US, Eurodollars. Here we have an article from July 31st, 2020 that shows dollar-denominated debt outside US hits 12.6 trillion, and two more numbers to know. This is from Barron's, July 31st, 2020. If you go back here and you add up the cumulative numbers, and you can do this by going to the Eurodollar, the trade balance at Fred, and downloading the Excel spreadsheet up to July 2020 from that article, you'll get the same number, around 12.6 trillion. So all you really need to do is add up all these numbers, and you get the number of dollars that are out there outside the US banking system. Now, all trade balances eventually balance out. It will balance out when foreign countries no longer need their dollars and send them back to the United States. Eventually, this is going to happen, and when it does, dollars will no longer be the reserve currency of the world, and it will go back to the monetary precious metals. Here is where silver comes into the picture. Here is a chart from April 1978 until August 1979. This was the first phase of the runaway bull market of silver, and we can see that silver versus gold in those first year and a half they kind of went in tandem. First, gold outpaced silver, the red line outpaced the blue line, and then by February, silver outpaced gold, but not by much. And it wasn't until August 1979 that silver really pulled away. And in those final months is when the public finally understood what was going on. Here you have from September 1979 until January 1980, when silver totally pulled away. And what exactly is happening here when silver pulls away? Why does it pull away? Why does it pull away from gold? It pulls away from gold because the public cannot afford gold, but they can afford silver, and they bid it up because they are scared. When all of those euro dollars, those 13 trillion euro dollars, when they start losing value, which they are, and they will, because the Fed is going to try to chase inflation, but will not catch it. So you'll have bonds that are losing value in principle. Once bonds lose value in principle, you're not going to have foreigners put money in bonds and treasuries anymore overseas. They are instead going to put them into commodities or something that preserves their value. And the primary commodities to preserve value when your currencies are falling are the monetary metals. This is what we are about to see. And we could have had evidence of that just today when we saw gold, silver and gold and mining stocks really climb very strongly today. Some stocks, some gold stocks and silver stocks were up over 10%. There's another thing that I want to remind people. Since gold's top in August 2020, if this were a bear market, we would have seen silver severely underperform gold since gold's top on August 7th, 2020. Instead, that is not what we have seen. We've seen silver stay pretty much stable relative to gold. Silver is down about 15% since gold's top, where gold is down about 10%. This is not a severe underperformance. Silver is holding up very strongly as gold has corrected for the past year and a half. It looks like that correction is finally over. This relative strength in silver relative to gold is not what we saw from September 2011 to December 2015. Silver collapsed by about 70% in that time versus gold, which collapsed about 45%. Now we are seeing silver stay relatively strong, and that has not stopped since gold topped out in August 2020. Now we should see the other side of that coin where silver outperforms gold, because the silver to gold ratio is still close to 80-1, which is historically very high. As this bull market progresses and public panic in the value of their currencies reaches a crescendo, we should see the gold to silver ratio descend to its old monetary ratio of 15-1, which means the public is treating silver as money again. If this is indeed happening, what we should see sometime soon, probably on a discouraging inflation report from the CPI or the PCE or whatever index, a surprise to the upside, should bring down the dollar index incredibly, perhaps by records. I'm looking at something between 5 and 10% in a day. Once that hits, and once the world sees what is going on, then you're going to have foreign bondholders start to panic. And those $13 trillion that are stored in bank accounts overseas are going to start leaking into the US banking system, which is going to accelerate consumer price inflation even faster. And there is nothing the Fed is going to be able to do about it. Sometime this year, I believe. I don't know exactly when, but I do believe it will be this year. There's going to be a recognition moment when everyone realizes where those extra euro dollars are going to go. And then once that happens, you have a Mexican standoff where the first one to fire creates a stampede, a flight out of US dollars. And once that happens, it's always the monetary metals that respond first. And for the public, that is silver. Whereas for the central banks, it is gold. If you're not a central bank, then you know which metal you're going to want primarily. This is Rafi of the Endgame Investor coming at you with this week's Silver Report for Arcadia Economics. And I will see you next week, possibly at very different prices than we saw today.
Well, thank you, Rafi, for another great silver report. You have me pretty darn intrigued about that ending, especially as well as, well, you'll find out soon enough what Bill Holter just emailed me and we talked about. Anyway, with that said, before wrapping up, I wanted to thank Andrew Pollard of Blackrock, who everyone has seen on the show multiple times. And partly one of the reasons that we're able to have the channel, that we're able to have Rafi sharing this silver report, now growing his own business as well, so he can help people. It's nice that we don't have to sell anything, just supported by people like Andrew that will benefit from a free silver price. So with that said, blackrocksilver.com, you can find out more about them. For those of you that are interested in silver stocks, I bring Andrew on so you can get to know him. And certainly several of the analysts that we've had on the show are big fans, including Dave Kranzler. So anyway, thank you, Andrew at Blackrock. Link to Blackrock in the description field below. And with that said, Just wait until you hear what Bill Holter said. Coming your way soon.